How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance. If this is your first time stopping by the channel, it is all about investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, I said it a couple of weeks ago, the moment we began this bull run, and now at this bull run's conclusion, that it wasn't going to last. And sure enough, here we are this week. The Federal Reserve is coming out with their chess moves and how to combat inflation. The market is all eyes on those chess moves, and of course, we are met with a ton of volatility. The stock market certainly fell. My account was not an exception to that rule, falling by $1,180.04 as of Friday, and now leaving my account sitting at $90,758.83 on the day. That brings me into today's video, and I don't necessarily want to talk about what has happened, but what exactly we can expect this week, and of course talk about not 3, not 5, but 7 dividend stocks that are actually discounted, and perhaps with the more volatility to come this week, it may even go on an even steeper discount, so stocks that you're going to want to pick up or at least add to your watch list. Make sure you watch this video through and through, and before we dive in, tap on that thumbs up button. That helps me grow this channel, and if you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. So a couple of weeks ago, I got in front of the camera. I was super excited and sharing with all of you that my account had hit a brand new record high, sitting around $93,717 and something change.
Let's knock this motherfucker out of the park!
And we are well on our way to surpassing $94,000. But now here I am reporting to you that we are back down. So what gives? Because honestly, there has been a lot going on in the market, but the key pieces of information that you, at least as an investor, should be aware of is the fact that all eyes remain on inflation. Inflationary rates are going up. And a matter of fact, what to watch this week, we have another report coming out with the Consumer Price Index, and we are already expecting that the inflationary rate is once again going to rise. The Federal Reserve will surely come out to then make remarks about how they're going to combat inflation more aggressively. That is certainly going to spook the market. And on top of all of that, we have the kickoff of earnings season for Q1. All in all, I foresee a lot of volatility to come this week, but as investors investing for the long term, that's all we have to do is kick back, relax, and just invest into high quality companies. So with that, I want to get into 7 dividend stocks that we can invest into or at least add to our watch list that are all valuable long-term investments. And I want to kick us off by actually starting with a sin stock. That stock is British American Tobacco, ticker symbol BTI. Now, British American Tobacco is, well, a manufacturer of tobacco and other nicotine products. It has a very rich history dating back to 1902, and just given the nature of its very addictive products, regardless of the market conditions, it's always a very reliable and consistent investment that you can make. Currently, it has a market cap sitting above $96 billion, and it's in the midst of keeping up with our more health-conscious times to develop more smoke-free products. However, it cannot seem to escape the geopolitical tensions, as it actually lost about 3% of their total sales as they closed down shop in Russia. And of course, a company like British American Tobacco and its competitors are always up against regulation on how exactly they can go about their advertising campaigns. So amidst all of this volatility, British American Tobacco has fallen from its 52-week high, coming down from around $47 per share, where it now hovers around $42 per share. That's roughly a 10% change and a pretty ripe opportunity for us as longer-term investors, especially with their current PE ratio hovering around 11.34. And looking into their future, they're going to be able to make that rebound, at least according to analyst expectations, coming back up to a median stock share price and a high stock share price of around $52.99. But we are here for British American Tobacco's dividend. They're coming in with a current dividend yield around 6.8%, a fantastic dividend investment that we can make that, of course, regardless of those market conditions, is always going to deliver through, as they have been doing for the last 22 years. Next up, I want to talk about a company that falls within the industrial sector. We are talking about ABM Industries, ticker symbol ABM. Now, ABM Industries was founded back in 1909, and since then it has been able to establish itself as an industry leader when it comes to janitorial services facilities engineering, parking, and custodial services. While it's not exactly a high growth opportunity, it certainly is a long-term value investment, which attracts me the most. I don't really have to worry about it, and actually I enjoy it the most because it is one of those boring, under the radar type of investments. And right now, with a $3.24 billion market cap, a PE ratio at 25.9, it is showing a lot of healthy signs for me as an investor. Now get this, it is down from its 52-week high as it fell from $54 a share down to around $48 a share. That is roughly an 11% change. Now analysts only foresee continued growth ahead of it as they have a lot of unfilled positions. They only foresee ABM Industries coming right back to a median stock share price of around $55 per share, or a high stock share price of upwards of $70 per share. And with a dividend yield sitting around 1.68%, they've been paying that dividend out for 54 consecutive years, increasing it year over year, making it a dividend king. ABM Industries is certainly a safe dividend investment. As for the next two stocks I want to talk about, both of which are within the financial sector, and how could I not be talking about financial sector stocks, as this sector has been hit tremendously hard over the last couple of years. Very first stock now I want to talk about is Discover Financial Services, ticker symbol DFS. Discover Financial Services owns and operates Discover Bank, but they also have a vast majority of their business solely focused on loans, whether personal, home equity, or student loans, and a lot of their business also to do with credit cards. With its founding back in 1985, it has emerged as an industry leader with a market capitalization sitting around $31.47 billion. It continues to deliver through to their shareholders year over year on returns. Now, as I mentioned, with the financial sector as a whole really hurting at this point in time, given all the market conditions, that is certainly reflective in their stock share price as it came tumbling down from a 52-week high of around $135 to around $111, roughly a 17% change. And with their current P ratio sitting around 6.26, it is certainly a ripe opportunity to pick up Discover. And analysts only foresee a rebound coming their way as they're going to come back up to a median stock share price of around $142 per share and a high stock share price at $158 per share, and their dividend yield at 1.81%, a rock solid dividend investment, which leads me now to our fourth dividend investment of the day, which is JP Morgan, ticker symbol JPM. Now, JP Morgan, as many of you know, is America's largest bank, yet also operating on a global scale in over 100 countries around the world. Now, since their establishment and up until Jamie Dimon's big takeover and revitalizing the bank in and of itself, I can really only foresee JP Morgan continuing to dominate the industry and lead the financial services sector as they continue to work with corporations, governments, and institutions, as well as all of us. Now, JP Morgan has a current market capitalization of over $392 billion. Now, for a bank, it is just way too big to fail, and how can we pass up the opportunity to add JP Morgan to our portfolios amidst all this volatility as its stock fell from around $172 per share all the way down to $133 per share, about a 22% change. And at this point in time, JP Morgan's PE ratio is sitting at 8.69. This is quite a steal, especially as analysts only foresee JP Morgan stock, of course, to rebound, coming to a median stock share price of $165 per share and a high stock share price of around $200 per share. Now, in terms of JP Morgan's dividend, it is currently sitting with a dividend yield of 3.04%. Now, JP Morgan is by no means a dividend king nor an aristocrat, however, very reliable as they've been paying a dividend out for over 32 years. Next up, we're actually going to be talking about one of my personal favorites. It is Darden Restaurants, ticker symbol DRI. Now, Darden Restaurants is an American multi-brand restaurant operator that was founded back in 1968 and has come to operate some of the most well-known restaurants within America, from Olive Garden, Longhorn Steakhouse, Seasons 52, and some of the more finer dining brands like Capital Grille, as well as Eddie V's Seafood. All in all, they have over 1,800 restaurant locations, and their market capitalization is over $15 billion. Now, amidst all the market conditions, and as all of us become hyper conscious on what exactly we're spending our money on and how much we're spending, given the high inflationary periods we're living in, a company like Darden Restaurants is certainly going to take a hit, and that is definitely what we have seen. Their stock share price has fallen from around $164 per share down to around $126 per share, roughly a 23% change. Now, in terms of their PE ratio and where it sits right now, around 15.93, I'd say Darden Restaurants is quite a steal as we speak. Looking into the longer term future, a company like Darden Restaurants isn't going to be disappearing, especially with those high quality branded restaurants. Now, analysts also foresee the same outcome with their median stock share price coming back up to $160 per share and a high stock share price priced at $180 per share. Now, in terms of Darden Restaurants dividend, it is shelling out a dividend with the dividend yield at 3.42%. Now, while on the topic of restaurants and fantastic branding, I want to talk about Starbucks, ticker symbol SBUX. Now, Starbucks is one of the world's most beloved coffee house chains. It was founded back in 1971, and as many of you are probably well aware, they have built an empire with over 33,000 locations operating in 80 countries, ultimately building up its market capitalization to $95.61 billion. On very recent news, I'm sure you all heard about Starbucks pulling their operations out of Russia, closing down 130 locations. But in even more devastating news for Starbucks, they are actually facing a bigger threat here at home domestically as they battle efforts of unionization on behalf of their workers. Now, Howard Schultz recently came back on board to be the interim CEO, and the company has thus suspended their share buyback program. That has actually spooked a lot of investors as their stock share price tumbled down from a 52-week high of around $126, where it now is trading for around $81 per share. That's about a 35% change. Talk about a discount and a steal. You can find it with Starbucks with their PE ratio hovering around 21.99. While it certainly could come down just a tad, I do believe that it's well worth it. And now analysts only foresee their future rebound coming back up to a median stock share price of $114.50 and a high stock share price at $135 per share. Now, while everybody's lining up to buy those mocha chocolate lattes, we as dividend investors are just going to collect on that dividend of Starbucks, coming in at a dividend yield of 2.36%. And last but not least, I want to talk about the biggest steal of the day, in my opinion, which is coming in from Leggett Platt, ticker symbol LEG. Now, Leggett Platt is a diversified manufacturer of engineered components and products from bedding to furniture and many products that you can find all throughout your home or automobile. To be honest, it's just one of those lesser known essential companies that is very lucrative. They've been in business since 1883 with a market capitalization hovering around $4.7 billion at this point in time. They've been facing a ton of supply chain disruptions coupled with inflationary pressures that's certainly driving up costs on their end, and that ultimately has spooked a lot of investors where their stock share price fell from around $59 a share down to around $33 a share, ultimately creating a whopping 44% change with their PE ratio at 12.09%. What a steal to get our hands on a dividend king with their current dividend yield sitting at 4.71%. Now, as we look into the future, and analysts are projecting their rebound coming back up to a median stock share price of $44.50 and a high stock share price priced at $50 per share. Now, YouTube, there you have it. 7 high quality dividend investments that you can get invested into right now from British American Tobacco, ABM Industries, Discover, JP Morgan, Darden, Starbucks, and Leggett Platt, all of which are undervalued at this point in time. If you like what you heard, you learned something new, drop all those comments below. Let me know if any of these investments are in your portfolio. Keep in mind, I'm not a financial advisor, so if you're going to make any investment decisions following my videos, just do your own due diligence. Now, before we get going here, tap on that thumbs up button and help me grow this channel. And of course, go ahead, subscribe to the channel if you haven't done so already. I'd love for each and every one of you to be on this journey with me. Now, YouTube, until the next video, I will see you all there.